All right, over to you two gentlemen.
We're on.
You are on.
All right, thanks, PETA. And I really mean that. PETA does a lot of work in setting these all up for us just to kind of show up and talk. So today the topic is about securing cyber insurance. And so we're going to talk about sort of the process of, what's out there in the marketplace, what happens. And so we'll have an agenda here. First, I'm going to talk a little bit about CIS because I have to. Then I'll introduce our guest speaker. We'll have a short presentation. We'll go back and forth with some questions. And of course, we'll take your questions from the audience. My name is Brian Chavis. I'm the Chief IT Strategist for CIS. CIS, just for a little credibility, we're a certified cyber security company and IT firm. So we've got MSP Overwatch, which is really difficult to get. We're in the National Cybersecurity Alliance, and we're a top-rated provider. So, and briefly, I just want to say that we provide low-cost, no-cost services around cybersecurity because we think it's a duty for all businesses to protect yourself and protect your clients, your partners. And obviously, in these days, if you watch the news, you start to understand how important it is today and how important it's going to be in the future. So our guest speaker is Michael McKenna. He's a senior risk management and strategy advisor at the Hill Group. He has a lot of experience in procuring cyber insurance. He's the guy there. And Hill Group is hugely, quickly growing and making themselves known through, especially on the East Coast and national email. So without any further talk about it, take it over, Mike.
Yeah, thanks, Brian. So everybody, thanks for joining. I'll try to keep this as painless as possible. I know speaking about and discussing insurance isn't always everyone's cup of coffee in the morning, but like Brian mentioned, I think it's super important that if you're a business owner, risk manager, or whatever the case may be, a decision maker about a risk management program, it's good to kind of stay in touch with cyber insurance, with the market. Whoever you obtain your insurance through, every broker, agent, company is completely different. So I just wanted to kind of just take a few minutes and sort of explain what it's like from an agency side. So as Brian mentioned, I'm with the Hill Group. I'm based out of Leesburg, Virginia, right outside of Washington, D.C. I specialize in government contracting, technology risks, companies anywhere from $1 million in revenue up to $500 million in revenue, in the same vast range of employees. So obviously cyber is a huge topic. You can make the argument that cyber 10 years ago was just or 12 years ago was maybe just a small add-on to insurance. But as the years have progressed, cyber is become probably and arguably the most important coverage that a company could and should have. Where cyber used to be a product that wasn't necessarily required. While it may not be required, you can make the argument that it kind of should be. So just kind of jumping in, I'm not sure, just whoever's on the call, I'm not sure their sensitivity or understanding about cyber. So essentially, cyber insurance is obviously going to be covering just the basics, network security, privacy liability, which also bleeds into business interruption. So in a sense, you have a company, like if you own a company and you have, let's just say a simple data breach, it could be anything from a data breach where people obtain your information, you hold your own employees' information, and they can either hold that information at ransom or they can obtain the information of your own customers, and it creates a whole litany of issues. So I just wanted to sort of touch where the insurance market is in terms of pricing, limits, claims that are popping up, and essentially what you should be doing when you discuss this with your current insurance agent. So first and foremost, I would say in terms of market conditions, cyber used to be something that was super inexpensive. You could get a cyber policy a number of years ago for as little as $1,000 or so. You'd get all the bells and whistles. Cyber breaches were not a major issue. Most agents and brokers didn't pay a lot of attention to it. And I would say in the last 10 years or so, 8 years or so, it's become a prevalent issue. So unfortunately, if you are in control of your business's cyber insurance program, you're probably experiencing the fact that cyber was inexpensive, but recent data is now showing that insurance cost for cyber year over year, March 21 to 22, is around 96%, which is a significant jump. Your typical line of insurance, whether it's general liability or property, during a hard market could be somewhere around 15 to 25% during tough conditions. But cyber claims are on such an uptick that we're seeing incredible jumps. So, and going back to what I had mentioned earlier, what's really driving that are ransomware attacks and phishing. So ransomware, being probably one of the most prevalent, is essentially computerized pirating, in the sense that an employee could, a company could be breached. I personally had a client who does printing for universities and high schools for their football teams and baseball teams, and they keep all their information obviously on their database. And they woke up to a not pleasant email one day that said, "We have all the licenses for all these logos, for all the material that you're going to be printing. We need X amount of Bitcoin by an X date, otherwise you're not getting back into your system." So like a pirate would do, they're being held ransom. So that's the most prevalent claim trend that's really driving insurance, pricing. Phishing, obviously, I think we've all been a victim of getting an email that appears to be from someone that you recognize, but they may change a little a letter or some sort of part of the email address where you think it's someone that you know, but it's not. My experience, again, I used to insure a community bank, and a number of times the CEO had allegedly reached out to an employee saying, "You need to transfer X amount of dollars at this time today." And they did. And then before you know it, that money has really, it's out of the country within an hour. So, so there's a lot that goes into why the pricing is going up. Claims are definitely one of them. But with that, as part of sort of like the market conditions, a lot of companies, I would say most companies that are smaller, that feel like they're family owned or they're under, X amount in revenue, they don't feel as though they need to have or invest in the proper protections to prevent an attack. And so what we're seeing is, in addition to the price increases with insurance carriers, you're now also seeing carriers saying, "Hey, we're giving you $1 million of coverage. You were previously paying $50,000 for your insurance program. Not only are you going to be now paying $100,000, but you need to put these controls into place." And unfortunately, no one's really in a position to negotiate with the insurance company. So, just as an example, the most common controls that any customer is required to have in place at this point is what we refer to as MFA, which is multi-factor authentication for remote access. So this is for emails and to access a secure network. The fact that people have been working from home for the last better part of 2 years has really put a strain on the cyber insurance market, whereas previously we were in the office. So the inside tech folks can sort of control the network. But if you have an employee who's working from home and they decide to go work from Starbucks for an hour or at the airport and jump onto unsecure networks, you're putting your company at risk. So that's, MFA is a huge control. Also, and these are just a short list of controls that if you even want to try to get cyber insurance, you have to have in place. So Unfortunately, there's almost no negotiating around this. Endpoint direction and response tool, essentially, in the past, people assumed having antivirus, Norton or McAfee or whatever the case was, is just not enough at this point. I know that Brian is more well-versed into the technicals in products like this. Email filtering is also a huge one. Again, the idea there is that you're trying to filter out those phishing emails where you may think you're getting an email from Brian, but then you realize, the name is a little bit misspelled. And then also just back to basics, like with workers' compensation, employees, cybersecurity training, giving them phishing simulations. I used to work for Chubb Insurance, and I would say at least once, maybe 2 or 3 times a year, you would have simulations. So you'd be required to take part of a cybersecurity training where they would show you examples of, a possible phishing situation or ransomware situation, just to keep employees alert. Maybe I shouldn't open this link. Maybe I should click the report button. Maybe before I even open the email, these are the actions I should take. So having that written direction in place, I think, is huge. And it's also becoming required. And then also the biggest thing that I hear in the market are backups. So backups that are segregated from the network, so encrypted and secured with MFA. And in some cases, a lot of people feel that if you're backed up to the cloud, that should be enough, but in fact, it's not. So those are just a few things that you could expect when it comes to working with your insurance agent, broker, and company. Pricing is on the rise. Cyber was underpriced for way too long, and the insurance companies are trying to make up that deficit because losses are at a super high point. And also, I would also make the argument, while it's not always required, it could be for a lot of companies, having a formal and written incident response plan, business continuity and disaster recovery plan, software patching procedures. These are all things that companies want to see. So when you discuss, what could we do to mitigate the increase in premiums, these are all things that are not only required, but a company will view you as a favorable risk in order to help you place the coverage at a reasonable cost. But lastly, the most important point I want to make, so being a broker, I have a very large, good-sized book of business with some great clients, some that have started doing, less than $500,000 in revenue, and I've seen them just blow up in a great way, just get super big. And unfortunately, there is a trend where a lot of insurance brokers will either not take on a small client or they won't pay attention to them. So this client may start out by doing $1 million in revenue, and they're sort of just shuffled to the side. I would say, as a client advocate, my suggestion is, if you have a risk management person in-house, if you're part of the insurance program, I would 100% try to stay engaged with your agent or broker at least once a quarter, depending upon the size of your program. So that would include contract review, claims that may have occurred, and in specific to contract review, any company can purchase. A lot of companies can purchase about $1 million of cyber. But if you're a larger company and you have, let's say, 10 contracts that require $1 million of cyber, what's your plan for if there's one claim that eats up your whole limit, right? Also, certain insurance companies are limiting capacity. So if you used to be with Travelers Insurance and Travelers was offering $1 million or $2 million, and they cut their capacity in half, what's your broker's plan? What are they going to do to secure your contractual requirements for your vendors? If you are a subcontractor for the government, how are you going to fulfill those certificate of insurance requirements? So a lot of times what I see here in the DC area are clients in the tech industry and the government contracting, defense contracting industry with insurance requirements as high as $20 million of cyber. I haven't seen an insurance company that's going to offer a full 20 million. So the worst situation you could be in is your renewal is coming up in a few weeks or maybe even a month. You find out the premium's going to jump up, 96 to 100% or even more. The insurance company is going to bring back the limit saying, we gave you 5, we can only do 1. And now your broker has to build what we call a tower. So they can get $1 million from this company, 2 million from this company. It's building an entire program. But the last thing that I would want is any of my clients being left in the lurch and not aware of where their program is. And unfortunately, a lot of agents and brokers don't want to lose business, so they don't want to deliver the news too soon because they're afraid their program will be shopped. My approach is that I engage with my clients on a quarterly basis so that they're fully aware and everything's transparent. So if they're being non-renewed, if their capacity is being limited, if their pricing is going to be just totally out of whack from their experience, then we sit down, we have a meeting, we discuss it, we make a plan, and we execute it. So I think it's important, and I'm very thankful that Brian brought me on so that we can have this discussion. Again, I don't know how many brokers are proactively doing this, but that's just sort of my 2 cents, just sort of a bird's eye view. I know I didn't get too granular with all the technicals, but yeah, so that's Brian, I think that sort of wraps up just a few of the points I wanted to make. I don't know if any questions that come in from our panel here.
So I have some questions. So talk about what the insurance underwriters do to verify that you have compliance. Like you talked about multi-factor authentication and those kinds of things.
Mhm.
Do they take your word for it?
Yeah, so a broker, like any broker, has a license through their state, right? So if I'm submitting information on behalf of a client, I'm submitting it that it's honest information. So if I were to write ABC company and I say, oh, this company has MFA, endpoint decision, email filtering, all this training, and a claim happens, there's a clause in insurance contracts that it's misrepresented and they'll deny the claim. So we have to be honest with, with representing our clients. So I mean, I've seen claims denied because either the broker was told the wrong information or the broker has sort of, fudged the information.
Right. So one thing that surprises me, I think, is that it seems pretty automatic. It's like you ask for a certain number in coverage, and if you fulfill the 5 or 6 requirements, then the number becomes X. Is there anything that you can do to sort of bring down that price by doing more than the basics?
Yeah, so there's a lot. So if you have a proven track record of good, what we refer to as loss runs, you have a good loss history. If you've been in business for, let's just say 8, 9, 10 years, and you've had either few claims or no claims, and you have a proven track record that your insurance, or excuse me, your controls are strong, that's taken into consideration when underwriters look at things. So when we submit things to underwriters, we're not punching this information into computers. There are actual people who are experts, many of which that I know personally, that look at all sorts of things. What controls are in place? How has the account performed in the past? What sort of liabilities do they have in terms of their contracts? Who are their vendors? Who are they subbing for? But ultimately, it really is up to your broker to advocate for you. So your broker has to have a really strong understanding of your business plans. And ideally, it's mostly important for insureds, our clients, to understand that a cyber risk management program is not the protective tool. It's there for when the worst case scenario happens. So you should have internal people in your organization that are implementing these stopgaps. So the insurance is just there for when things really get out of hand, but it shouldn't be used as a tool where, and unfortunately, I think the reason why we have all these requirements in order to place coverage, the MFA and all those things I mentioned earlier, is because previously people had said, you know what, it's too costly for us. We didn't budget for this, but we have cyber insurance. So, we'll let the insurance companies pay for it. But unfortunately, that's, if you do that over the course of a number of years, over millions of clients, the premiums don't match the losses. So, but yeah, I think that's probably the best way to look at it. It's case by case. It's underwriter by underwriter. It's company by company. Every company has their own appetite. They have their own appetite for risk. So it really just depends. But all in all, I'd say your biggest advocate will be your personal advisor.
Awesome. Yeah, for anyone out there, if you don't understand these terms like MFA, I'm happy to explain them to you offline. MFA is one that people wonder what it is, and everybody's using it probably with your bank, where you log into a website and then they text you a number and you have to enter that in. That's called multi-factor authentication. So it's a fancy word, but we all know what it is. So do insurance companies, maybe this is outside your area, but do insurance companies report losses to an industry association or the government or anywhere?
So a client wouldn't be required to report to the government. In terms of carriers, I can't really speak for each carrier. I know that there is data out there that will speak to industry numbers, overall numbers in terms of, let's just take, I don't know, a CNA insurance. We'll say, we've written X amount of cyber policies. This is, these are where we're seeing the most claims. But yeah, insurance companies, I'm not sure if they're actually required to report those numbers. They're publicly traded, so I'm sure a lot of information is shared. But if you are a client and you have an insurance or a cyber insurance policy, you're under no obligation to report any information in terms of claims to anyone except for your own insurance company, which should be your first move. So I do work with defense contractors, and when they are breached or they have a breach or they think they've had a breach, their first concern is always, we need to let the contractor know because we're the sub under them, even though we carry our own insurance. But in reality, the second you find out about a cyber claim, you have to reach out to either myself, if I'm your broker, or to the insurance company, preferably myself, so we can go to the company together or whatever the case may be. The more time that lapses with a data breach or whatever the case may be, the worse it gets. So I would say, to put dollars to donuts, your average cyber claim at a minimum, if you're a smaller company, just with expenses, not even settling, is probably anywhere between $300,000 to $600,000. And that's for, what you'd almost consider like a mom and pop company. So family owned t-shirt printing company. If they have a ransomware attack, they could be easily looking at $600,000 just to remediate and figure out where this came from and how to sort of stop the fire, and let alone all the things that happen afterwards that Brian, you're super familiar with.
All right, you're scaring everybody. So I guess another thing I've been curious about, if cyber insurance is growing so rapidly, are there more companies getting into the business or less companies?
It sort of goes both ways. So you're seeing a lot of uptick of companies coming into the space. We refer to them as insurtech companies, essentially technology companies that start an insurance wing that hyper focus on cyber. I work with a few of them myself, and they have such a grasp on technology, in some cases more so than your traditional carriers, that they do a pretty good job at it. For your more old school carriers, the ones that you're probably more aware of, they're not pulling out necessarily, but they're going back to what I mentioned earlier. They're more so pulling back capacity, meaning you might have had a $5 million cyber policy, but based on their underwriting guidelines, they may be only offering $3 million. So I haven't run into situations where companies are necessarily saying we're not writing cyber anymore. It's case by case. There could be certain classes of business where that is definitely true. But again, it's a blend. So obviously, there's a lot of money to be made for companies in cyber with the right clients, with the right controls in place. So there's definitely an emerging market for companies. So I don't think most people won't be in a position where they can't obtain cyber. There are always ways to get cyber insurance. It's just always about what's most cost effective for our clients, what's the right coverage, and how is your broker approaching the conversation? And are you feeling left out in the lurch, or are you aware of what the market's doing? Are you aware of how you should budget, in X amount of years for your cyber program? So I think communication is the biggest thing. You try to be the biggest advocate in a lot of ways, but staying in touch with your clients is the number one, because it's changing. It's month by month at this point.
That insurance tech was interesting. It seems to me like there would be companies who would offer insurance and then actually go into the company and be sure that they had all the controls in place. Is that happening?
Yeah, I guess to some degree. I mean, my experience with insurtech companies, specifically one I work with, Corvus, which is a great company, they're specifically designed to offer cyber insurance, and then they start to off branch into other areas, but they use data analytics. That's like their basis for everything. So they're data analytics driven. I think a lot of their companies feel like, or they are ahead of the curve of your more traditional insurance companies. I like them. There are certain things I don't like about them, but overall, I mean, I have a pretty good favorable opinion of them. But yeah, it just depends on the client. I mean, it really does. There are some clients that would do way better off with an insurtech company for a number of reasons versus, going with an AIG or a Chubb or a Hartford. So it's interesting. I mean, we're in the middle of the cyber storm right now, and not necessarily in a bad way. I don't mean to, scare people away or make them freak out about their cyber insurance. It's just that we're in such an emerging point of cyber. It was very quiet, and then it started getting louder, and now we're at a crucial moment. And that's, I came on here to, let people know that you should have a broker that's having this discussion with you.
Right. Yeah, that's interesting. It just seems to me like the industry is going to shift in some way. It's like these traditional carriers are probably, I don't know, they're going to make some changes, and then, like you said, there are other companies that are coming into the market. So given that, what opportunities do clients have to shop the insurance? Would they do it through you as a broker, or would they, go out and find different companies themselves?
Yep. So 99 times out of 100, you do have to have a personal advisor or broker like myself. So I run into this a lot. I will meet people, whether it's at industry events, on a golf course in Florida, at an airport, whatever the case may be. Once we get into the insurance discussion and folks realize that cyber has been that thing that's sort of been nipping at them, I'll have a discussion with them. We'll sit down, we'll discuss their program, understand what their needs are, what their vendor needs are, what their certificate of insurance requirements are, what their financials look like. So in terms of shopping the insurance, I wouldn't say that if you're looking at increases, that should be the only reason you quote unquote shop your insurance. I'd say it would be most favorable to stay with the same company if you haven't had losses. Shopping every year is never really a great thing unless it's completely necessary. So if you feel like a claim wasn't handled correctly, that's certainly one thing. But I'd be a little wary of saying, you know, if we pay $50,000 for insurance with, let's just say the Hartford. I know some folks at the Hartford. And well, you know, now we have a quote with an insurtech company for, I don't know, let's just say 13,000. Let's really dig to the reason. So what's the reason behind it? Because these companies are very smart. They use AI technology for everything. So having an advocate like myself, having someone that can actually interpret the reasoning behind you know, a price difference is important. And then if you feel like, you know, you're getting you know, I hate to say the term, but apples to apples coverage, but there's a huge discrepancy in pricing, then certainly I think shopping is a healthy thing to do. And I think every 4 to 5 years it should happen just to make sure you're aligned with the market.
All right, well, we're at the top of the hour, gone over a couple of minutes, but I just want to say thank you to everybody. If you have any questions, let us know. You can email us. I've got my email on the screen. Email me, I'll email Michael with any questions. And once again, thanks for coming and have a great day.
Thanks, everyone.
Thanks.